cash is king. CFO is worried about cash. The owner of the business should be worried about cash. But sometimes they get caught up in, hey, our sales are really good, right? Your sales could be really good, but you could be buying too much inventory, right? So if you have too much inventory and it's not turning fast enough, then that might be causing you to, bleed your cash.
Cutting expenses is probably one of the first things you would do, right? Because especially if the company is bleeding, there's no other choice but to cut a lot of...
Hidden thing is always inventory, right? If you're in a business where you're selling product to somebody, inventory is typically your number one potential problem.
Again, cash is king,
Yes.
right? So I think this is something everybody understands.
Yep.
But how much cash does one need?
We all should really have probably 3 months of cash on hand. And then that way, if something happens, you kind of have enough to get you through the next few months before you may have to go talk to a bank or have a more major problem. We're very growth minded at Duncan-Parnell, right? So we've been looking for businesses to acquire. We keep our eyes open, right, to see who there is. And we can take that cash and go buy a business. It makes it a lot easier if you don't have to finance the deal. When I was in college, it's like 20 some years ago now, there was, Management Information Systems was like
MIS,
one of the majors, right? And I think that's kind of
Yeah.
gone away now, but
Yeah.
like accounting and that have merged and it's really accounting information systems. And you really have to understand, I don't want to say a lot of code, but you got to understand enough to be dangerous.
How can we learn from the leaders, educators, and experts in our industry? What can we take away from their successes and failures? How can we apply this to our businesses, our careers, and our lives? This is what we are here to find out. I'm your host, Karthik Chidambaram, CEO of DC Cap. We make systems, talk to each other for manufacturers and distributors. I love to learn and share that knowledge with others. This podcast is about having meaningful conversations that we can all learn from. Thank you for being here, and I hope you enjoy this conversation. Hello, everyone. Welcome to a brand new episode of the Driven by DC Cap podcast. We have a very special guest today, Pete Chrobak, Chief Financial Officer of Duncan-Parnell. Pete, thank you so much for joining me today and excited for this conversation.
Yeah, I'm excited to be here, Karthik.
So Pete, can you tell us a little bit about what does Duncan-Parnell do and about your business?
Yeah, so Duncan-Parnell was founded right after World War II and was a traditional printmaker. So blueprints, all that stuff, geared around kind of the construction industry. And over the last 75 plus years, we've evolved into a distributor of technology geared towards construction industry for surveyors. And our primary product is Trimble manufacturing product of the surveying equipment. So geospatial surveying, mapping, all that type of stuff. We use drones too. We sell those. And we also have our traditional printing business as well still. And that's kind of evolved into signs and graphics. It's really a long elevator speech, all the stuff we've done. And in the past 6 months, we bought a marine construction dealer that also sells similar Trimble equipment, and then also an ag technology company called Ag Technologies that sells autonomous equipment for tractors out in the field, and then also uses some of the other geospatial equipment to auto steer the tractors as well. So we have a lot of exciting stuff going on.
It is exciting, right? So we talked to a lot of technology leaders, and I'm really very interested today, right? Because it's more of finance, right? So
Yep.
you're the Chief Financial Officer.
Yep.
I've always wondered, right? So what does a Chief Financial Officer do?
Yeah, so it depends on the size of the company, right? So a small business, CFO has their hands in a lot of different things because they typically have the finance and accounting role. They have HR, sometimes purchasing, sometimes IT and technology. Duncan-Parnell is a mid-sized company, so I get to have my hands in all those areas there. So I have to wear a bunch of different hats, flipping back and forth, and I don't really just focus on finance, right? And then my background previously was a controller of a company, and I got very involved in the operations of how the distribution business ran. So I think I'm kind of a more non-traditional CFO in the fact that I have a fairly strong operating background as well and get involved in technology too.
I'm not an expert in finance, right? So, but then controller is more like where you spend the money, right?
So the controller is like in charge of all the internal controls, right? Segregation of duties, making sure the bank accounts are rect, the financial statements are right. They get all the numbers in the right place, and then you know what your profit and loss statement is at the end of the month, and you know where your balance sheet is at, and your cash position and inventory, things like that.
We have a lot of startup listeners in our audience as well. So when does a company typically hire a CFO, right? So let's say, when I'm small, starting out,
Yep.
I don't really need a CFO. I can do pretty much, I'll send the invoices, receive invoices and all that, right?
Yeah.
And then maybe, I work with the tax consultant and get my taxes filed. When is a good point for a company to invest in a CFO?
Yeah. So I would say, probably when you get to that 15 million-ish range Most of the time when you're a small business, I used to do a lot of consulting, right? You work with the tax guy. I was that tax guy. And then you start asking the tax guy more and more questions, right? About your bookkeeping and other things. Probably means you need to hire an accountant at that point in time, right? So you hire your accountant. They can kind of get everything buttoned up. You keep talking to the tax guy. And then once you're around that 10, 15 million range and your accounting person isn't able to take you to that next level, it's about the time to start thinking about either, maybe an outsourced CFO, where you're only using them maybe for 10 to 15 hours a week. And as your business keeps scaling, you can bring in somebody full time.
And you were a tax person, right? So you were helping multiple companies, but then you decided to get full time into one company, right?
Yeah.
So why did that transition happen? I'm just curious.
So I spent 11 years in public accounting, and public accounting, a lot of tax. I worked for smaller firms, so I got to have my hands in audits, bookkeeping, consulting work. So I really enjoyed working with small businesses, primarily family-owned businesses. And that's where you typically get 3 or 4 brothers and sisters in the business. They're taking money from mom and dad. There's a lot of personal stuff going through there. But it was enjoyable to have conversations with them and help them run their businesses and kind of get some of that stuff out of the way. So after 11 years in, I didn't want to become a partner. That wasn't where I wanted to go anymore. And I started looking for roles as controllers in privately owned businesses in that mid-size area, because that's kind of a good entry point from public accounting into private industry.
So let's say you become a CFO of a company which is bleeding, not doing really well, right?
Yeah.
How do you go fix it?
Yeah. Well, I mean, first you've got to figure out what are the problems that are existing, right? So cash is king. So CFO is worried about cash. The owner of the business should be worried about cash. But sometimes they get caught up in, hey, our sales are really good, right? Your sales could be really good, but you could be buying too much inventory, right? So if you have too much inventory and it's not turning fast enough, then that might be causing you to, bleed your cash. So you got to get your inventory in order, which means you might have to sell some stuff below a certain price to get cash back in. So I'd probably start looking at inventory, looking at other things they're paying for, trying to cut expenses. And it's hard to ramp that type of stuff down if you have a lot of bad habits.
But cutting expenses is probably one of the first things you would do, right? Because especially if the company is bleeding, there's no other choice but to cut a lot of what...
So the hidden thing is always inventory, right? If you're in a business where you're selling product to somebody, inventory is typically your number one potential problem. But then, the expenses too. Do you have a really expensive car that you're paying for? Are you buying people vehicles that don't really need them in the company? Are people taking people out for meals a lot? There's a lot of low-hanging fruit that people could look at and kind of dive into. And you're typically not going to get that from your tax guy or CPA firm, because you're typically bringing them the information when you need your taxes filed. They're hurrying up and doing the taxes, and they're not getting a chance to spend time with you on those things that could be meaningful to your business. So reviewing a cash flow statement would be a good thing to do, right?
Absolutely. No, I can totally relate to that, right? I mean, even when I file personal taxes, right? So the tax guy is really, really busy at that point of time in the year. So he doesn't really have too much time to sit and look through everything. And we're also rushed for time. They just go file it, right? So I can totally
And when you're operating your business, you're busy all year. You don't want to make time for your tax guy to talk to him. But really, in like July, August, September, you should be talking to them about that year's taxes.
And you talked about cash is king. Again, cash is king,
yes.
right? So I think this is something everybody understands.
Yep.
But how much cash does one need?
It depends. So so if you're looking at your business and you look at your expenses, it's always good to have 3 months or so of cash on hand, right? Even if you're in your household, you want to have some savings aside. In America, we all kind of live paycheck to paycheck, but we all should really have probably 3 months of cash on hand. And then that way, if something happens, you kind of have enough to get you through the next few months before you may have to go talk to a bank or have a more major problem.
Even for a business, 3 months of cash is good enough?
Yeah, that's where I think I would start, right? It depends on how profitable your business is, but the more you can hoard cash, look at Apple. Apple has a ton of cash, right? And and that's what a lot of really healthy businesses do. They have a lot of cash on hand. So the more you have, the better. But if you're running a small mid-sized business, you want to pay yourself. And some people, just want to run the business just to make a good profit, have a good life, and that's really where you kind of need to look at it at.
Let's say you have a lot of cash, right? Sometimes it's really tempting to invest, right? Hey, you know what? Cash is sitting. I don't want to. I mean, I want to really do something with it, right?
Yeah.
So typically, right, as a CFO, I mean, obviously, let's say, you need 3 months of cash in hand to run the business. Okay, I have that, but then I have more cash, right?
Yep.
So how do you invest that, right? I mean, do you put that in S&P 500 or?
Well, it depends on what you want to do, right? Like we're very growth minded at Duncan-Parnell, right? So we've been looking for businesses to acquire. We keep our eyes open, right, to see who there is, and we can take that cash and go buy a business. It makes it a lot easier if you don't have to finance the deal. Smaller businesses may not do that, but some of them do. But you could also open up investment accounts as well. I mean, you can also, invest back, if you're an S corporation, right, you can do a distribution and then invest it personally. So just depends on kind of what you want to invest in, growing your business or making money for yourself.
And at Duncan-Parnell, right? So when you acquire a new business, you guys acquire a lot of companies, right?
Yep.
So when you acquire a new business, is it mostly just cash acquisition, or do you also do debt, right? So do you borrow from the bank as well?
Yep.
Which is a better strategy, or does it depend on the interest rate and everything? Or let's say I have cash in hand, interest rate is very low.
Yep.
So what do I do?
Yeah. So, I mean, I like when the investment pays for itself, right? So when interest rates were lower, it's nice to get a 3 or 4 year loan, take that out, pay maybe 20% down, and then pay it back over the next 3 or 4 years with the operating profits that's generated out of the business. And now it's successful, it's paid off. The interest rates have been high for the last year. So if the cash is available, we've used cash to pay for some of those acquisitions. And then we don't have the interest that we're paying on those either.
And let's say if it's not profitable, right? So let's say, I pay 20% down or 25% down to buy a business, and then I borrow, right? And then the interest rates are high.
Right.
But it's okay, I borrow because I like the business, okay? But then if it doesn't generate enough cash to pay for itself, then that's not a good investment.
Yeah, right. Well, that's so you could go into something, right, where you think it's going to do well and it's not doing well. And now if you have multiple companies, you may be putting more of your cash from another part of your operations into that business to help it keep going for a while. And then you got to figure out what your problem is. Is your sales pipeline bad? Did you buy too much inventory? Do you have too many expenses? And you're back into kind of managing your P&L.
And the role of a CFO, right? It's kind of very blended even with, I would say, CIO. I think, at Duncan-Parnell, what we have done is a great example, right? So when we were chatting, you were telling that, hey, I do a lot of technology investments, right? And because of the investments you did, it's kind of helped increase revenue quite a bit, right? So can you talk about that, right? So how do you look at technology investments?
Yeah. So, 4.5 years ago when I got to Duncan-Parnell, the owner, our president, and I were talking about growing the business through acquisitions and also organic growth. So the big thing is you don't want to have to add a lot of people to your corporate team or your back office staff, right? Accounting, HR, those roles. You want those to kind of scale reasonably with the business. So what I decided to do then was put a kind of group of people together, which I called our technology team. And there's probably about 6 of us in the room, and they were all from different areas of the business, right? Accounting, operations, purchasing. And I said, hey, let's talk about what type of technology we should have in the business. And as we were talking about it, some different ideas came up, and we decided to put an AR automation solution in place, right? So where customers can go online and pay their bills, at the same time, collection notices are automatically generated to them by email or, a list of phone calls for our people to make. And that probably saved 30% of our AR team's time, right? So now we could pivot them to do something else on the back office team, or as we were growing, they could take on some additional tasks in business. Same with AP. You put in an AP automation, you don't have to add another headcount to the team because they can just manage that process. But I've also learned my lesson. You put in technology and you automate a bad process, it just makes things worse. So you have to really be mindful of your scope of what those technology projects are, so they don't cause more headaches at the end of the day.
And for AR automation, you're using Unified AR, right?
Yeah, Unified AR is our product for automating collections and has our online payments. And then we also use Wells Fargo's integrated receivables option, which is a check comes into the bank or an ACH comes into the bank account, and it will use some AI to match up the payments to the receivables aging. So between those two, we have a fully automated AR solution.
Dan Hatcher is a good friend, so I'm glad you're using Unified
Oh, no,
AR.
Dan's awesome. It's probably one of the best things that we put in place was Unified AR.
You talked about AI, right? So, how are you seeing that? Are you leveraging that quite a bit? And, as the CFO, how do you see that panning out?
So AI is a little scary, right? Because you can put information in all these different websites like ChatGPT and other places where that information may not be secure. So that's my probably number one concern is what are our people using and how do we put rules around that? At the same time, you look at what Epicor's doing and they're building AI into their ERP systems, which is that PRISM program. And then you have Salesforce with, I think it's called Einstein now, or they might have changed the name. And it's which one do we use? There's just so much AI out there right now. It's hard to figure out where we need to be and where we're going to get the most bang for our buck. So we're probably a little slower than I'd like to be on adopting some of the AI because we're waiting to see what some of our partners do, of software companies that we're already using.
No, that makes sense, right? Especially with finance, the finance data, it's critical.
Yep.
And you don't want all of that lying everywhere.
Yeah,
right?
right. Yep. Yeah, no, that's the scariest thing. Somebody puts something out there and it goes out into the web and who knows who's going to see it or if it gets out through a hack or something.
I'm just curious, right? So for technology, right? So there are a lot of jobs out there and tools like Copilot helps you be a better coder.
Right.
But when it comes to finance, right? So how is the job market, right? Because obviously you need a lot of, maybe, you definitely need more people in technology or in distribution than in finance, right?
Right.
So let's say if somebody is just graduating from college,
Yep.
majoring in finance,
Yep.
what advice would you give them?
Yeah, so like for finance and accounting majors is who we run into a lot when we're hiring for our accounting team or our purchasing team or some of these other areas. I think the biggest benefit for them would be trying to embrace a lot of the technology, like looking at like what Copilot and Microsoft programs can do to help, or looking at other data tools, Power BI, learning how to use that. The more you understand, not just the accounting or finance side of the house, but also how the software program can kind of leverage the data that you have, I think the more successful they can be right out of the gate.
Absolutely, right? So essentially, right? So for finance, tech is it's the key, right? So you can't just say, I'm just doing finance,
Nope.
but I don't know tech, that doesn't work.
Yeah, they're very blended, right? Like when I was in college, it's like 20-some years ago now, there was, what was it? Management Information Systems was like
MIS,
one of the majors, right? And I think that's kind of
Yeah.
gone away now,
Yeah,
but like accounting and that have merged, and it's really accounting information systems. And you really have to understand, I don't want to say a lot of code, but you got to understand enough to be dangerous, right?
A lot of people ask you for financial advice. Hey, I have $100,000. What do I do?
And I tell them I'm not an investment person, right? Because my background has always been the taxes and the bookkeeping, the accounting and the controllership. But like now as I've evolved, they do ask questions about, operational things or strategic thinking.
So, but what would you advise, right? Let's say I have $100,000 and I want to invest and I want to grow it. What would you advise?
Oh man, that's tough right now. I don't know. I'd probably say it depends on what your personal interests are, right? A lot of people are probably risk averse, but like if it was me, I'd probably look as, if do you like your job or not? Is there something you're really good at? I'd probably invest in opening my own business or tell you to do your own business. Yeah.
That's awesome. That's great advice. I know you read a lot. You read a lot of leadership books, right? So can you recommend a couple of books?
Rumsfeld Rules, I think, is one of my favorite books that I've read. And then the other one I really like is First Break All the Rules.
Yeah.
And that one kind of reinforced a belief I had. So I'm very much a people person, and I love interacting with people in my team. And I like seeing what people are good at. And at the same time, you have people that work for you in your organization that may not be in the right seat on the bus. So you're not trying to fix what maybe a weakness of somebody, but you really want to put them in a position of strength so they can be successful. And that's one of the main takeaways I took from that was, it was helping me like, yes, it is okay to move somebody from one seat to the other if they can be more successful for themselves in the business.
No, absolutely. I think that's very critical, right? So essentially, I'm just trying to understand, right? So you read and you like something you read, then you try to put it to work. Is that how you do it?
Yeah. Well, and sometimes it's just reinforcing like what I already thought, right?
Sure,
So
yeah.
I like to read to reinforce some of my beliefs, but at the same time, if I can pick up, one or two tidbits, it helps me along the way.
And the theme of this podcast is driven.
Yep.
So how are you driven?
Man, I just like to help people. Every day, I just interviewed a person this morning for our HR team. And I said to her, what would you say if I said, I love Mondays? And she looked at me, she's like, I love Mondays. Like it's a fresh start, like the beginning of the week. And I'm like, I love it because of all the people that I get to interact with and work with. And if I can help somebody develop in their career, that's probably one of the biggest motivators for me.
So Pete, I really enjoyed this conversation. Thank you so much for your time. Thanks for being a part of the Driven podcast. Thank you.
Yeah, I appreciate it, Karthik.
Yeah.
Thanks.
Thank you for joining our Driven by DC Cap podcast. Your support means a lot to us. If you enjoyed this episode, please click the like button and subscribe. Consider leaving us a review. Thank you for joining us.